Not only do I not want you to pay any fees, I hate fees. Fees can be hidden, they can be complicated, and not only am I interested in making you money, but also simplifying things for you. A lot of times we just get in our heads that these concepts are too complicated and we can't make the decision ourselves, so we don't end up doing anything. That's why I'm here. I want to simplify it for you. Let's just jump right into it. Hey y'all, welcome to my channel, Make Money with Mary. My channel exists to equip you to, well, put really simply, make money. If you follow along and subscribe, you can expect to see videos on personal finance, investing, and financial planning. I believe our society, education systems, etc. fail to appropriately teach us about these topics, which are absolutely essential and relevant to pretty much every single person. You should know that my content is for all ages, and it is truly my desire to see you financially excel. So with that, let's actually get to the topic of the day. I want to make this really clear. I'm making these videos to empower you to become confident in your ability to manage your current and future finances exceedingly well on your own. I firmly believe that your learning will translate into earning. And that's why I'm here to share very practical information with you. Big thank you to YouTube for making continued education free. It is my hope that with the help of these videos, you won't have to pay money or lose money to manage your money. All right, so let's get into it. So where should I be putting the money I make and save? Well, first of all, you can Venmo me at I'm just kidding. I just went over how I'm glad that YouTube makes education free. I don't want you to pay for anything. The whole like Venmo in your TikTok bio thing, I think it's weird. So hey, I'm making this video because this is something I actually really wish that someone would have explained to me a long time ago. Even if you feel like you have a good handle on where you should put the money that you make and save, I have a lot of information as of today's date that might help you switch up what you're currently doing and help you make even more. So let's get into it. What should I do with my money? Stuff my cash in a mattress? Leave it in a basic checking account? Is any old bank savings account sufficient? No. Or should I be investing? If you're thinking to yourself, am I really qualified to invest my savings? Short answer is yes. Hopefully, as you keep watching my videos, you'll learn how to invest even if you have no experience today. All right, so where should I put the money that I make and save? We're gonna break it out into three main options. 1, in a pile of cash or checking account. 2, in a savings account. Or 3, in a brokerage or investment account. Not giving you any hints or anything, but... All right, number 1, in a pile of cash or checking account. Please do not sit on physical cash. At least a checking account is going to be FDIC insured, which is the Federal Deposit Insurance Corporation. It was founded in 1993 as an independent agency of the US government. It insures all bank accounts up to $250,000. So if all of a sudden your bank just went bankrupt out of the blue, or they lost your money somehow, the FDIC would pay you the full amount as soon as possible. But when I do talk about cash, I also mean the funds that are in a checking account because those are very liquid funds and essentially cash. You can think about these funds as not really being your savings. These are what you need to live week to week. You should have enough money to cover your credit card bill, rent, living expenses, but this is not where you should be keeping any of your savings. Anything else that you don't need immediately in the next couple of weeks, you should not be keeping in a checking account. This is a quick point that you need to understand, and if you haven't watched my video on compound annual interest, you should definitely watch it. I will link it in the description below. Because of inflation, if we're just assuming a 2% inflation rate, which inflation could be much higher over time, any money that's not earning interest or invested is losing 2% value per year. So if you just keep all your money in a checking account every single year, it's losing at least 2% value, which is why we don't want to hold on to all of our money in a checking account. And that's why in points number 2 and 3, you'll hopefully find a better alternative. So if you don't feel like listening to anything else I have to say today, and this is the only option that you want to choose, at the very least, please pick a you gotta laugh at yourself. All right, pick a checking account that has no fees or at least gives you a bit of interest. You're gonna hear me talk a lot about how I'm all about no fees. No overdraft fees, no minimum balance fees, no monthly service fees, no foreign transaction fees, no transfer fees. I want you to avoid paying money that you don't need to be paying. These can be hidden, they can be complicated, and not only am I interested in making you money, but also simplifying things for you. Quick point I'm gonna make here is that online banks are a great tool. They're built very lean with not a ton of costs, in which case they can pass on those cost savings to you. I think it's funny that back in 1994, Bill Gates, who tends to be ahead of the times on everything, called traditional banks dinosaurs. I don't know why I find it so funny, but I do. They are dinosaurs. And it's been 25 years since then. So are they nearing extinction? Well, not anytime soon, but I do think online banks are the way of the future. So if you're just looking to really simplify things with an online checking account, a newer bank you could look at is called Chime. Again, no promo on any of this stuff. I'm just sharing what I think is actually helpful and useful. What's really cool about this is just that there's no hidden fees, and a lot of traditional banks can kind of squeeze in hidden fees in there that you're not even realizing that you're paying. I like this company too because it also has this really cool savings feature where it rounds up your purchases to the nearest dollar and puts it into their savings account, which I will get into in point number 2, but we're not quite there yet. Also, if you're thinking, should I be worried about these online banks? Is my money gonna go away? What happens if they go bankrupt? Well, all you need to do is make sure that that company is insured by the FDIC. So yes, all your accounts with Chime are insured up to $250,000. So Chime is great, but currently my favorite checking account right now is the Wealthfront Cash Account. It's an online bank that gives you a current annual percentage yield of 0.35%. Not a lot of checking accounts at traditional banks will offer you this. Usually it'd be at a credit union or something like that, which we can explain credit unions in another video. It's basically a non-profit bank that is owned by the members. So I'm gonna go hop off this video right now, go open my Wealthfront Cash account and start earning interest on my checking. The cool thing about this account too is it's FDIC insured up to $1 million. That's 4 times more than most accounts. Oh, and also just quick note, I did check both Chime and Wealthfront and their ability to give you access through ATMs. Chime has access to over 38,000 free ATMs. They both make it super convenient to find a free ATM near you, and you're actually going to be able to find way more free ATMs with them than your traditional bank. So I hope that kind of clears up checking accounts for you and helps you realize you should not keep that much money in them because they're not going to earn you any money in the long run. All right, let's jump into point number 2. In a savings account, you could choose from a basic savings account, a high yield savings account, a money market account, or a certificate of deposit. Let's talk about basic savings accounts for a second. The thing that's different about savings accounts from checking accounts is usually you don't have a debit card, check, so you can't be taking your money in and out all the time. According to the FDIC, the national average interest rate on savings account currently stands at 0.05% annual percentage yield. So if you have an account of $5,000, that equates to a whopping $2.50. We're getting rich, people. I hate to break it to you, but if you have a savings account with a traditional bank, you might not even be earning this. Oh, but good thing I'm here to show you how you can move your money and start earning interest. So even a well-established huge company like Schwab, which is where I have my brokerage accounts, I highly recommend. Their bank high yield savings account gives you an annual percentage yield of 0.05%. Again, 0.05% of $5,000 is a whopping $2.50. Oh, that hurts. So again, here I go with the online banks. If you're looking for the best rates in the industry right now, excuse me, you're going to have much better luck with savings accounts at online banks. Again, because they're not going to charge you these hidden fees that make things really complicated, and I want this to be really simple, especially with their apps and interface. It makes managing your finances very transparent. I'm a big fan. So back to Chime really quick. They're actually giving you a 1% annual percentage yield on your account right now with no fees and no minimum deposits. I did a lot of research on all of the annual percentage yields that banks and credit unions are offering you, balancing that with simplicity in terms of no minimum deposits, no fees, etc. And my favorite one for you right now is Chime. Again, no promo. If you're thinking 1%, that's not very much money for a high yield savings account, well, you're right, because we are in a very low interest rate environment right now. As all of you, I'm sure know, we are walking through unprecedented time. Buzzword of the year. COVID. That means there's a lot of unemployment, a lot of layoffs, businesses are shut down, economy is much slower, we're looking at recession, negative GDP growth, all of this that's really detrimental. So the Federal Reserve, which is the central banking system of the United States, often referred to as just the Fed, slashed interest rates when COVID came about because low interest rates are supposed to help stimulate the economy. If interest rates are really low, more people can borrow more money, start more businesses, our economy can grow, etc. What that means for you in these accounts is that your annual percentage yields are going to be really low because they're based off of the benchmark rate that the Fed sets. And the Fed is going to keep that benchmark rate near zero probably through 2022. The economists are thinking thinking the Fed is going to keep rates at rock bottom for the next 4 or 5 years? It's hard to say, but until the economy reaches full employment and inflation runs above 2%, rates aren't going anywhere. So I hope that inspires you to choose option number 3. We'll get there soon. So if you're going to choose a savings account, please choose a high yield savings account. Another good option is Ally Bank, Marcus by Goldman Sachs. Again, you just want to make sure there's no minimum deposits, no fees, to really simplify things for yourself and make sure that you're not paying money where it's not due. Money market accounts and CDs, or certificates of deposit. You can essentially think about them as being high yield savings. They're just named differently because they're set up slightly differently. So a money market account is a high yield savings account that usually comes with the ability to write checks or withdraw cash. And then a CD, or certificate of deposit, allows you to put in a fixed lump sum of money for a set amount of time, promising that you won't take it out, and it gives you a fixed and guaranteed interest rate on that money. So it's fixed and very safe. And banks can give you the interest rate premium because you're agreeing to leave that lump sum of money untouched for a certain amount of time. But I might not suggest this option right now, given rates are really low. It's not going to provide you any benefit over just a high yield savings account. Some banks do offer no penalty CDs, which means you can take the money out at any time. Usually they have a little bit less interest rate than a normal CD. But let's jump into point number 3. This one's important because at the end of the day, a 1 versus a 0% yield is not huge. Given we're in a really low rate environment and you're not going to be earning very much money at all on your high yield savings or your checking account money, we want to open a brokerage account, which is an investment account. First and foremost, with a brokerage, you should open a Roth IRA. So why do we open a brokerage or investment account? At the most simple level, allows you to invest. So these are the 4 main types of securities that you could invest in: a bond, an individual company stock, an index fund, and a mutual fund. I'm gonna make a video on each one individually in really simple terms for beginners. Index fund investing is extremely simple. What you can do with an index fund is pretty much own the whole entire market for just one little price, one share. And over the last 10 years, the total market has had an average return of almost 13%. So if you had done this 10 years ago, you would have averaged almost a 13% annualized return every single year. We don't have time in this video to talk about all of the types of investments, why you should make them, and when and how. My next videos are going to be on this so that you can do this as soon as possible. It's really simple because you can buy and just hold for a really, really long time and the market will do the work for you. So a brokerage or investment account can act as a high yield savings account for all of your cash as well. Your cash you can put for free into money market funds. That's going to give me an average annualized return of what any of those other high yield savings accounts were going to give me. So since you're going to be watching my videos and you're going to get started investing, which is a little bit of education, you can totally do this on your own. My personal preference would be that you put all your savings in a brokerage or investment account. So it's easy when we eventually start investing for you to go ahead and do this right away. Also, a lot of brokerages offer checking accounts, such as Schwab. It's really nice to just have all of your accounts in one place. Again, when we start simplifying things for ourselves, we can actually attain our desired results a lot more easily. That's what I really want for you. So I hope this was able to clear a few things up for you. 3 main types of accounts: checking, savings, or brokerage and investment accounts. You shouldn't ultimately be sitting on a pile of cash. Go straight to the brokerage and investment account. Get our retirement account set up as well. It's the only account where we can really work to make sure that our money doesn't lose any value due to inflation. Anyway, if you have any questions outstanding, please write them in the comment section below. I'm glad that you watched these videos. I'm proud of you. I'm excited to see you do really, really well. I just want to encourage you really quickly, if you are blessed with the ability to save money, I encourage you to think about the ways in which you could use this money to help someone out. Work hard, be wise, invest, and use what you gain to bless others. And as always, I hope that you have a really wonderful day.